Well, we just got the latest labor force numbers. Employment increased by 67,000. That's 0.3% of an increase in October, the second consecutive monthly rise. And the employment rate as well was up 0.2 percentage points to 60.8. The unemployment rate declined 0.2 percentage points to 6.9%. And for more on this, to help break them down, we're joined by Brendon Bernard. He is a senior. We don't have him yet. Alan, we're going to talk about it. We're trying to figure out where he's going. It's a bit of a surprise. I think I saw a number where they were talking about maybe 2,200 jobs was what they were looking at, expected to be lost. Instead, we're seeing an increase.
Yeah, it's great numbers. Obviously unexpected. I don't know what the full-time versus part-time number is as yet. Wondering where the job growth is coming from. For me, it's a number that obviously the Bank of Canada is going to be looking at before obviously their next meeting with respect to interest rates. We're starting to see the inflation rate tick higher in Canada. Prior to the last couple of months, we saw jobs data actually quite weak, and so the Bank of Canada was starting to cut rates. Going forward now, with two strong jobs numbers under our belt over the last couple of months, what will the Bank of Canada do? I'd still like to see them continue to cut rates. Okay. I think that will continue to help this economy and our market. So we'll see what they do.
I'm going to bring Brendon back in. We've got him now. We had some technical difficulties, but Brendon Bernard is joining us now. He's senior economist at Indeed. Brendon, thanks very much for joining us.
Thanks for having me.
You're looking at the numbers. Initial reaction?
Yeah, it's definitely a positive report. This now adds a fifth month to what has been quite a volatile period for the labor force survey. Actually, the most volatile since the pandemic. It's not unprecedented, but we know to take these numbers with a grain of salt. The truth is in the trend, and the trend has been pretty flat. But this is one positive data point to fill out the information and besides just the employment figures, which bounce around month to month, we saw the unemployment rate tick down to 0.2 percentage points from 7.1 to 6.9%. That's a solid sign for the labor market. The unemployment rate has been probably the most reliable indicator of how things are going recently. This doesn't change the Canadian labor market situation. It's still not a job seekers market. But when the monthly numbers can bounce around so much, you take the wins where you can get them.
Yeah, my question would be more, when you look at these numbers, the headline number is great, but when you look at, it looks like full-time employment was down month over month. So a lot of these jobs, are they in the part-time space? Like, I'm wondering where these jobs are being created from. And if it is more part-time versus full-time, is that kind of giving us indication that maybe the headline number looks a lot better than really what it is underneath the surface?
Yeah, so the full-time, part-time number split for this month was on the part-time side. So this was a part-time increase coming from today's numbers. But let's think about the noise in this data. The headline number is noise. The full-time, part-time split is even noisier. Last month was a massive blowout for full-time. So once again, got to look at the trend here. The trend, the numbers month to month, really volatile. But overall, also the overall share full-time versus part-time employment, pretty stable, kind of zooming out at just above 18% for most of this year. So on the whole, over this year, the full-time, part-time share relatively stable. Now this month's was a pop on the upside, and so that causes us to discount like the 1 month. But in terms of the trend, I think it broadly is consistent with just the noisy headline numbers that we can't get excited about any of these reports too much, but that the overall trend isn't one of definitely like dramatically snowballing weakness like it might have appeared this summer when we had losses of 40,000 and 66,000. Now we're on the upside of that. The full-time split is kind of even noisier than that, and so I guess I don't read too much into those numbers.
Have we seen numbers or a flow like this? It does seem to be all over the place. Considering what we had going on, we have the tariffs. We thought that would be an impact, but we seem to be there seems to be no direction with this. Have we seen this before?
We have. I was looking at this before today's numbers because we had four just really wild swings in a row. The pandemic, let's leave that out because those wild swings actually were legitimately happening in the economy. We actually we haven't seen it in the past, let's say 5 years, but going back to the 2010s, these wild labor force survey numbers are not new in sort of for some of us who've been following for longer periods. It's not new to see these wild volatile numbers. And one question I get when people ask about just like trying to get the signal from the noise is we see the U.S. job numbers where it does seem like the monthly payroll prints that come out every month are much more stable. We don't see these wild swings month to month. And what's going on there? Well, the thing is that the labor force survey is not the same as the current establishment survey, which is what the BLS publishes to get that payroll number every month. That is a survey of firms and tallying up payrolls and employment, whereas the Canadian numbers are a household survey, where when you're surveying even 55,000 households a month, which is a huge sample for a monthly survey, you just get this wild noise. And the U.S. equivalent to the Canadian data, where the unemployment rate comes from, it's also very volatile. So really what we're missing here compared to the U.S. data, which is much more stable, is that they're just tracking something different, a survey of firms where the response rate and the responses are more stable, and that gets a more reliable month-to-month signal of what the trend is.
All right, I want to get one more question. We're almost out of time, Brendon, but youth unemployment was down. And that's been one of the numbers everybody has talked about.
Mm-hmm. Yeah, and that's definitely interesting. So seeing here, youth unemployment rate down to 14.1%, still really elevated. So definitely not something to celebrate just yet, but youth in general have been the cohort that's been struggling the most in today's tough labor market. The market has really turned against job seekers, those who are looking for work, and youth are, given their circumstances in life, are often looking for work at much higher rates than older Canadians, and so they've seen their conditions dip the most over the past few years. Hopefully, this is at least a sign of stabilization in the youth numbers. I think for thinking about the youth employment situation doesn't exist in a vacuum. It's gotten worse than others. But at the end of the day, they're tied to what's going on in the economy. And so nice to see a stabilization in today's numbers. But I think getting the youth unemployment situation turned around, the same thing that's going to do that is the same thing that's going to get the headline unemployment rate turned around. And that is just a stronger economy. And there we're kind of muddling through right now. We have to see a real turnaround in the economic situation and growth getting back to normal rather than the subdued pace to really be confident about that trend.
Okay. Are you seeing any effects of AI yet in the economy? Obviously, I think youth employment, probably that would be the first place you start to see artificial intelligence starting to take over and perhaps affecting the youth unemployment rate first. But are you seeing, I'm hearing from different people that it's not really yet playing a major factor, but it's just starting. So perhaps AI will eventually take more jobs away from all of us, but still not happening as yet. What's your opinion on that?
I think that's probably about right. I think one of the things is we've got to when we think about youth employment, you've got recent grads and folks trying to land that career job, but you also have a lot of teenagers, and teenagers are actually the demographic who've seen their employment conditions deteriorate the most over the past few years. The jobs teenagers are working in, they're not the jobs where the new AI era has really shaken up things. They're working in retail, which is impacted by e-commerce, but that's not a new story. They're working in food service and accommodation, and things like that. And they just haven't been landing those jobs at rates to keep up with Canada's really fast population growth over the past few years, which has increased the number of job seekers. So AI, I think probably on some, white collar jobs, it's probably slowed hiring down a bit, which has created challenges for new grads. But the employment situation overall, I think, is more about the economic situation broadly.
All right, we're going to wrap it up there. Brendon, thanks as always for joining us.
Thanks for having me.
Brendon Bernard is a senior economist at Indeed.